I think about it a little bit, especially with retail. Retail is just in such a brutal position right now, and it's been on a decline for a while. And I know SRG is trying to move away from retail and in retrofitting their new properties or their current properties. It's just it's an additional layer of risk, but then again, it all that really comes down to is if you can get it at a really good buy price, that eliminates or at least mitigates a lot of that risk that if retail falls off the face of the earth, even more than it already has, then if you got it at a great buy price anyways, you should be insulated somewhat. So that's kind of the case with any sort of macroeconomic factor. I was actually talking with this, spoiler alert, I'll be on Tom's podcast coming out soon, and we just talked about that a bit right before we jumped on this call. It's like the real insulating factor for any sort of macroeconomic thing is getting something at a really good buy price. That goes for any asset, whether it be stocks, real estate. If you can get something at a discount to what you think it's actually worth, if what it's actually worth actually falls as well, then you're insulated. So that's kind of a tangent, but
yeah, the only exception to that being as long as it doesn't eventually go to zero, like if you can buy something at 10 today and 5 in a couple of months, it's not necessarily better if it ends up at zero. But assuming that's not happening,
right.
I completely agree.
That is a given. I should have clarified.